President Trump extending trade talks with China for another 60 days as both countries continue to iron out key differences. Joining us now to discuss that and a whole lot more, the 79th Secretary of the Treasury, Scott Bessent. Mr. Secretary, good morning. Good to see you.
Morning, Jonathan.
You're a cover model now. You're famous. Can we get that front cover up for Business Week this month? Mr. Secretary, I remember when you were just Scott Bessent and we could go for breakfast together, the three of us, and no one would bother you. What happened?
I don't know, but I hope it's not the curse of the cover. Because
is this a top?
Historically, the being on the cover is a curse. So
well, this equity market is not cursed. It keeps grinding out all-time highs. There is some confidence that we're settling some issues on the trade front. There's one issue that came up this week that we'd love to hear from you about, and that's Nvidia. Where did this agreement come from? You've been quite innovative, this administration, on trade issues. Where did this come from? Who came up with it?
The president. The president, as I tell everyone, the president is one of the most open-minded people I know. He does everything at first principles. Why do we do things this way? Why shouldn't we do it the other way? And, I think that this is a very unique solution, allows NVIDIA to expand into China. It can make NVIDIA chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Key word, unique. Is it unique to NVIDIA and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, right now, this is unique, but now that we have the model and the beta test, why not expand it?
What do you say to people who think we're putting a price on national security concerns by basically selling export licenses?
There are no national security concerns here. We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. Right. So we do not want the standard to become Chinese across the world or even in China.
Well, we have exclusive reporting that Beijing is now sending out letters to firms saying actually shrug off those H20 and use our domestic champions. Is this something you might discuss with your counterpart?
Oh, sure. We can discuss that, but it also tells me that they are worried about the NVIDIA chips becoming the standard in China. Look, NVIDIA is an incredible product. A lot of the technology in China is, they're piggybacking, and I'll use piggybacking as a kind word for acquiring our technology.
Do you mean stealing?
Your words. And yes, that's what I mean. And the NVIDIA, Jensen Huang, just stays years ahead of them.
Criticism came from the Wall Street Journal editorial board, though, about this new unique policy. They say it's a step toward government control of private business. Are you concerned? Some of these policies are starting to look like the country you're actually trying to de-risk from. Central planning, basically, out of the oval.
No, not at all. Because where we got was with this unfettered trade, we did not have secure trade or fair trade. And so now we are trying to make it secure. So, you don't want to, we're not sending out the highest level chips. And, we don't want to sell everything to everybody. So there is a need for intervention. And, the Wall Street Journal just let her rip. Kind of bunch of grumpy old men over there. I was with them yesterday.
This is going to raise some revenue. What do you plan to do with it?
Pay down the debt.
It's all going to go to play down the debt, because we have heard some stories about the money going back to consumers, going back to citizens of the United States taxpayers.
Well, President Trump's talked about that, and look, the bottom 50% of wage earners in the one big beautiful bill are getting a lot of money back. No tax on tips, no tax on overtime, no tax on Social Security. Auto loans are going to be tax deductible. So I think if we could make a substantial dent in the debt repayment, then we could talk about a program like that.
Could you share with us the kind of numbers you're thinking about at the moment, just in terms of revenue raising? And not just the NVIDIA deal, I'm talking about the tariffs on top of that. What are we raising at the moment, month on month?
Well, Jonathan, I've been saying that we could hit $300 billion this year, and I think that number is going to be low. I think I always like to come in low and then surprise on the upside, but I think in the next days or weeks, I may have to move that number up substantially.
You've heard the debate playing out on Wall Street now for a number of months. Who's going to pay the tariffs? By definition, the importer will pay the tariff. The more important question here is who absorbs the costs, whether it's the foreign supplier, whether it's the domestic company here in the United States, or the end consumer. We got some data yesterday. You've seen it. We've all looked at it. Limited tariff pass-through relative to what was expected. Because of that, a lot of people are suggesting that maybe companies are absorbing costs in a way we didn't anticipate. Perhaps the pass-through will be more muted in the future. Are you comfortable with where things are now, or do you think things might rebalance in the months to come?
Jonathan, I think your framing there is exactly right, because that, obviously the tariff itself is paid at the port, but what if the producer in the other country has lowered their price the 10, 15, 20% so that there is no price change with the tariff? And obviously our largest trade deficit is with China, and China does not have the same profit objective that other Western democracies do. So that is an employment agency, and my view has been that they would continue to eat the tariffs. They are doing that. So I think what we've seen is likely to continue happening. I also think there are probably a lot of corporate margins that got very fat during COVID, and now we're seeing a return to normal pre-COVID margins.
You see this as some kind of redistribution between corporate America and maybe the consumer, Main Street and Wall Street?
I think this administration is all about Main Street, but Wall Street's hitting a new high. So it's this false equivalency. It's not either or. I tell everyone, I call it parallel prosperity. Wall Street's done great. Main Street can now do great.
Wall Street might do even better if the Federal Reserve cuts interest rates. The president was pretty clear yesterday, put out this comment: Jerome Too Late Powell must now lower the interest rate. Is it reasonable to give them a bit more time to draw conclusions about what's happening here?
Well, I think what we could see is that, first of all, what if the BLS data had been the higher quality and we'd had those numbers, Jonathan? So if we'd seen those numbers in May, in June, I suspect we could have had rate cuts in June and July. So that tells me that there's a very good chance of a 50 basis point rate cut. And I think President Trump is very good at giving these nicknames. And I think the reason that the Jay Powell gets the nickname Too Late is because he wants to go into a series of rate hikes. He's not willing. He's not Alan Greenspan, who was very forward thinking. They try to be more data driven, which I think is a mistake, because I think we are going back into an economy like we had in the 90s. So, it's just very old fashioned thinking. But I do think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September.
A 50 basis rate cut in September. Does that signal that the economy, though, is not doing well?
That signals that there's an adjustment and the rates are too constrictive. If you look at any model, that we should probably be 150, 175 basis points lower. So I think the committee needs to step back. I think probably one of the most politicized governors just went off the board, and that she was very, very political, I believe. And I think that
what did she do that gave you that impression? I'd love to know.
Sorry?
I imagine you're referring to Governor Kugler. What did she do that gave you that impression?
I think there's a lot of inside baseball. And look, Governor Kugler, you read what she was saying when Kamala Harris was running, that we needed rate cuts, we needed this, we got to foam the runway. And then all of a sudden, it was hard to know whether, TDS was a Trump dementia syndrome, or Trump derangement syndrome, or tariff derangement syndrome.
You get the opportunity to remake the Federal Reserve. The president gets the opportunity to remodel, reshape the Federal Reserve. And I'm not talking about the remodeling that maybe the current chairman's going through. We'll talk about that another time. I want to talk about the complexion and character of the committee. The changes that you're making at the moment. Stephen Myron, let's start with Stephen. How quickly can you get Myron confirmed?
We'll see. The president has great sway with Leader Thune. Leader Thune's been a great partner during the tax deal, and I think that he would like to see Stephen, who I've known for a long time, get on there as soon as possible. So I'm hopeful about the September meeting. And Jonathan, the president's concerned about the building and those massive cost overrun, which just tell you that there is no accountability at that organization. There's no oversight in terms of the spending, but the president and I are both concerned about the foundations of the Fed. The foundations of the Fed, and how did this happen, and why did it happen, and how did the leadership let it happen?
When it comes to Director Myron, do you expect him to stay on past the January term that expires from Kugler's seat?
I wouldn't expect that.
So who are some names you're thinking of the Kugler seat? Because everyone has been focused on who is going to fill the chairmanship role. Who are you thinking to fill that extra seat?
Well, Anne-Marie, we're working on the big list right now. I think there are going to be a couple more names revealed today. They're going to be private sector names. So we had a series or a list of current Fed members. We're going to have some private sector, very well respected,
like who?
Very well respected people, and then we will get to the second seat.
Can you give us some names, a little bit of a tease? Maybe people that have been on this program?
Well, I just did tease telling you there would be some private sector names.
Okay, when it comes to the Fed chair, though, can you give us a sense of how many names you're actually thinking about?
Well, I'm going to interview, I'm going to cast a wide net, 10, 11 people. And then there'll be a group of us who are meeting with them. And we want to talk about monetary policy. We want to talk about regulatory policy, which is very, very important because the Fed stepped, I think, big-footed the other regulators. The Fed's one of three regulators, Federal Reserve, OCC, and FDIC. And I think that they need to understand that they are one of three. And then the third is the institution itself, which I think is what President Trump has been focused on quite a bit, too.
After you do this process, how many names are you going to give to the president, and when does he start those in-person interviews?
Yeah, we don't have a timeline. By putting Stephen Myron in, that gives us more time. And again, I want to cast a wide net. The president's very open-minded. Before he chose Jay Powell, Janet Yellen was interviewed. John Taylor was interviewed. Two of them couldn't be more different. So, they were under consideration.
I give you credit for coming up with a really credible list to replace the Federal Reserve Chair, Jay Powell. Without a doubt, I think most people that come on this programme agree with that. What I want to talk about is the BLS now, because there's some controversy around this pick. I'm sure you've heard some of the concerns. EJ Antoni had said the following earlier this week before getting the pick from the president. Until this issue with payrolls is corrected, he said, quote, the BLS should suspend issuing the monthly jobs report, but keep publishing the more accurate, though less timely, quarterly data. We'd love your thoughts on this. Is that something you'd support?
Not at all. And look, what somebody says when they're a private citizen is very, very different. I called for a shadow Fed chair, and now that I'm in the seat, I don't think we need to do that. And I was there when EJ was interviewed, and he is incredibly qualified. And I think the most important thing here is that we get back to the integrity of the numbers, because it just became okay, just like so many things in our government, for it to get sloppy. And EJ is precise. He has a doctorate in economics. I think President Trump put a lot of thought into this. He was very thorough in his questioning of him. So what we want is good data, because you can't make good decisions without good data. As I just said, it's very likely that the Fed would have been doing something else if in June, in July, if they had had this data.
Well, let's talk about the data we've got and the process we have and how we might improve that process. As you know, that data is prone to big revisions. In your career on Wall Street, we've all been dealing with this for a long, long time. Because of the process and the lag time in the responses, it is constantly reviewed month on month as you get more responses from corporate America. How can we improve that process so this data is less prone to these big revisions?
Well, I've been in government now for 7 months, and I can tell you that if we take the IRS, which I'm now the head of, they've been working on a tech upgrade since 1990. We brought in a young person to fix that. The tech upgrade has been underway for longer than he is old. So he wasn't born when the tech upgrade started. So, you know, I just think like this idea that we're accepting this mediocrity in government, why don't we bring things into the 21st century? Why don't we bring it into the digital age? Because, you know, I don't know about political bias one way or the other, but what I can tell you is that the sample response size kept getting smaller and smaller, and then they filled in the cells. And you know, anytime you get judgment versus data, then things become qualitative and not quantitative. And I think EJ is going to do a great job of bringing back quantitative standards. I think he, like these attacks in the press, I think are all wrong of him.
It's not in the press. It's even within conservative economic circles that don't think that he is credible to run the commission. Is the Trump administration open to putting more resources then to BLS, maybe lifting a hiring freeze?
Well, you know, Anne-Marie, that's more of a Democratic idea that, you know, we need more. It's always money. It's always money. It's, you know, whether it's New York City schools, Chicago schools, DC schools, you get terrible outcomes. I think that he's going to sit back, look at the process, and how can we use technology to do this better? You know, I got to Treasury, and it was shocking. We process 1.5 billion payments a year, and 500 million of them, 1/3 of them, did not have what's known as a TAS, Treasury accounting symbol on them. And people were just hitting send, and you know, it wasn't a gigantic leap just to try to get people to do their jobs.
This has big implications for how people view credible economic data, but also the markets as well. So let's talk about financial markets and the bond market. You've always been a 10-year man. The spread between the 2-year and the 10-year, I think, has been really stable over the last several months, where we've started to see some leakages between 10s out to 30s. That 30-year bond, as the Treasury Secretary, I remember you referring to yourself as the nation's top bond salesman.
Yep.
What's the usefulness of issuing a 30-year bond when it feels like at the moment we're outsourcing borrowing costs to what happens in Japan, what might happen in the UK, what happens in Europe? What's the value of issuing that?
That's a great question, Jonathan. And look, we are committed to keeping inflation expectations low, and this is a global phenomenon, whether it's the 10 or the 30. The U.S. 10-year is one of the few 10 years where the yield is down on the year. So that tells me that there's credibility from Treasury, credibility from Fed, that the inflation expectations are well anchored, but there's definitely leakage from the Japanese have an inflation problem. I've spoken to Governor Ueda. My opinion, not his, they're behind the curve, so they're going to be hiking, and they need to get their inflation problem under control. In Germany, we saw a substantial spike in German rates in the past week also. So, our 30-year is getting dragged along with that. We've been refilling the Treasury General account, which during the debt ceiling standoff got run down, and we're doing that with short-term bills.
Do you see more reason then to pare back on 30-year issuance with all this in mind? And this is a change again for you now in the seat as you look at these developments and rethink things. How are your thoughts on that matter evolving?
Yeah, they are evolving, and we'll see where things go. I do think as we bring down this big deficit that we inherited, I think that the U.S., that the entire U.S. curve can have a parallel shift down relative to the rest of the world.
Do you think you can work with the Federal Reserve on this matter? So if we take the weighted average maturity of Fed holdings at the moment, I believe that's running at about 9 years. The issuance of the average maturity of outstanding bills, notes, bonds, that's closer to 6. Do we need to narrow that gap a little bit?
Yeah, look, I don't think the Fed needs to get back into the large-scale asset purchase business. And we've had very good demand, especially in the belly of the curve, which is where asset managers seem most interested now.
When it comes to other things you're working on in Washington, D.C., there's still this stock ban legislation that has been circulating around Congress. Is the president prepared to sign that bill?
I don't think we have the perfect bill yet, but I am going to start pushing for its single stock trading ban, because it is the credibility of the House and the Senate that you look at some of these eye-popping returns, whether it's Representative Pelosi, Senator Wyden. every hedge fund would be jealous of them. And the American people deserve better than this. People shouldn't come to Washington to get rich. They should come to serve the American people. And it brings down trust in the system, because I can tell you that if any private citizen traded this way, the SEC would be knocking on their door.
Do you think it needs to extend, though, beyond single stocks? These individuals can still have ETFs and other products.
Well, what I used to do at my old firm was you could buy ETFs. They had to be widely held ETFs, so they couldn't be of a small size, and there was a long holding period. The House and the Senate, they're supposed to be working for the American people, their constituents. They're supposed to be making law, and they shouldn't be trading every day. I'm not going to name names, but there was one person in Congress who had 12 or 1,300 trades 2 years ago, and my hedge fund didn't have that many trades.
Do you think it needs to also extend to the executive branch and include the president and the vice president?
I think that they would be fine on the single stock and the holding period.
Maybe they're just great traders, Mr. Secretary. Do you not think they're just great traders?
It is a statistical anomaly. Warren Buffett wrote an essay once, and he talked about the zoo in Graham and Doddville. And if all the orangutans in that zoo kept typing the Bible, then there's something going on in that zoo. There is something going on Capitol Hill in terms of information leakage that is statistically not sound.
Do you think those restrictions should extend to the executive branch?
Sorry?
Do you think those restrictions should extend to the White House?
Well, they already extend to Treasury.
Have you spoken to the president about this? Is he comfortable?
Well, the president's come out in favor of this, and Hakeem Jeffries is in favor of this too. And I can tell you, if I were Congress and I were looking at my ratings with the American people, I would be pushing this, because again, it's an extractive class. You should not come to D.C. expecting to line your pocket. You should come to D.C. to do the people's business.
We couldn't agree more, and it's been greatly disappointing to see that there's tighter restrictions on how journalists trade than over some members of Congress in Washington.
Yeah, it is one of the things that I think we can do to get trust back into the system.
Just wanted to finish on the president's visit to Alaska going into the weekend. Anne-Marie's going to be there. What do you think we can accomplish this weekend?
I think the president has been thinking about this a long time. He believes, as do I, that this war never would have started if he had been president, and he is committed to ending the bloodshed, but not at any cost. Not at any cost. I think everyone has been frustrated with President Putin. We expected that he would come to the table in a more fulsome way. It looks like he may be ready to negotiate, and we put secondary tariffs on the Indians for buying Russian oil, and I could see if things don't go well, then sanctions or secondary tariffs could go up.
What about China? They're the main purchasers of Russian crude.
Again, I'm not going to get ahead of the president, but the president is the best at creating leverage for himself, and he will make it clear to President Putin that all options are on the table.
So sanctions can go up, or they can also be loosened?
Sanctions can go up, they can be loosened, they can have a definitive life, they can go on indefinitely. There's this Russian shadow fleet of ships around the world that I think we could crack down on them. But Anne-Marie and Jonathan, the one message I would leave you with, it's that President Trump is meeting with President Putin, and the Europeans are in the wings carping about how he should do it, what he should do it. But the Europeans need to join us in these sanctions. The Europeans need to be willing to put on these secondary sanctions. I was at the G7 meeting in Canada with President Trump, and the Europeans kept talking about Senator Graham's bill to do the secondary tariffs.
Yep.
And I looked at all the leaders around the table and I said, is everyone at this table willing to put a 200% secondary tariff on China? And you know what? Everybody wanted to see what kind of shoes they were wearing.
I imagine the Germans went very quiet, and that's been a problem for a long time.
Yeah, it's put up or shut up time. The president is creating his own leverage. We need the Europeans to come in and help create more leverage.